Students, we are going to learn Introduction to Partnership. Only short sums and short theories are asked from this chapter, but I shall also teach you long sums from this chapter because this chapter is the base of second chapter. If you have not subscribed our channel yet, then subscribe it and press the bell icon to get latest updates and latest videos. If you have any query regarding this chapter, you can comment me and also you can ask me your doubts. I will solve your all doubts. Let's start theory. Partnership. What is partnership? According to the Indian Partnership Act 1932, partnership is the relation between the persons who have agreed to share the profit of a business carried on by all or any one of them acting for all. Or you can write this definition like this also. General definition. When two or more persons who are competent to undertake a contract to earn profit from a legal business, the business is known as partnership. Students, if in the examination, if it is asked that write down the definition of partnership, you can write any of above definitions. But in the examination, if it is asked that write down the definition of partnership according to Indian Partnership Act, then you must write first definition. Next, partner. What is partner? What is the meant by partner? The persons who enter into the relationship of partnership are individually called partners. Next, partnership firm. What is the meant by partnership firm? The business run collectively by two or more persons in partnership is known as partnership firm. Let's begin. Next, characteristics of partnership. First characteristic is creation by contract. So, partnership begins through agreement. Partnership agreement can be in written or oral form, but written form is more desirable. Second, aim of profit. Partnership firm is formed to gain or earn profit in the future. But in future, profit or loss can occur. Profit or loss is distributed among the partners in their predetermined proportion. Third one is legal business. Partnership firm is formed to do a legal business. For example, suppose partnership firm is formed for an illegal business and in future a dispute occurs among the partners, they cannot go to the court for solution. So, partnership firm is formed to do a legal business. They can go to the court for their solution if it is a legal business. Fourth, agent of each other. The business of partnership firm is run by all the partners or any of them for all or more than one partner. Therefore, thus, each partner is an agent of each other. Fifth, number of partners. According to the Companies Act 2013, the maximum number of partners can be 100, and according to the Companies Act 2014, the maximum number of partners can be 50 in a firm. Next one is unlimited liabilities. In that, as per Partnership Act, partners are responsible to pay business liabilities from their personal property when the firm does not have sufficient assets to pay liabilities of the business. Every partner individually and collectively is responsible to the partnership firm. Therefore, the liability of each partner is unlimited. Seventh and last characteristic is ownership and management of firm. Partners are owners of business and they do the management of business. The management of business is done either by all the partners or by one partner or by more than one partner. Let's start next partnership deed. You know that the partnership begins from the agreement. Partners undertake agreement within the provision of Partnership Act. Partnership deed acceptable to all the partners is prepared at the time of the commencement of a partnership firm. The partnership agreement can be written or oral. A written agreement of partnership is known as partnership deed. A written partnership deed is more desirable so that the solution of any dispute in future can be solved. The partnership deed is an administrative constitution of partnership firm. It is very important that generally the following content is included in the partnership deed. Which are they? So then first, details of partners. In that, the information about name, address and other details of partners is included. Second one is details of firm. The details like name and address of the firm are included. Third one, type of business. The information about the type of business is also included here. Fourth one is commencement of partnership. The information about the commencement date of the partnership firm is also covered in the deed. Fifth one, capital. The amount of capital taken by each partner is mentioned in the deed. It is not compulsory to bring a capital by each partner. Sixth one is interest on capital. Whether interest on capital is to be paid or not. If yes, then what percentage? These points are mentioned in the partnership deed. If no provision is made in partnership deed, no interest on capital is paid to the partners. Seventh, drawings. What maximum amount can be withdrawn by each partner is also mentioned in the partnership deed. 8. Interest on drawings. At what rate interest is to be charged on drawings made by the partners during the year is also mentioned in the partnership deed. If no provision is made in partnership deed, no interest on drawings is charged to the partners. Ninth one is distribution of profit and loss. In which proportion profit or loss of business will be distributed among the partners is provided in the partnership deed. If no provision is made in partnership deed, profit and loss will be distributed in equal proportion. 10th, salary, bonus, commission or remuneration. To the partners. How much salary, bonus, commission or remuneration will be given to the active partner of the firm is mentioned in the partnership deed. If no provision is made in the partnership deed, salary, bonus, commission or remuneration will not be given to the partners. 11th, interest on loan provided by partner to firm. The rate of interest is to be mentioned in the partnership deed when any partner has given a loan to the firm. If no provision is made in the partnership deed, 6% per annum interest will be paid on the loan given by the partner to the firm. Next, 12th, goodwill. The computation to determine the value of goodwill at the time of admission of a new partner and at the time of retirement or death of a partner is also mentioned in the partnership deed. 13th, admission and retirement. The provisions belong to admission of a new partner and the retirement or death of a partner is also mentioned in the partnership deed. Next, dissolution of firm. In what circumstances firm will be dissolved? What procedure will be adopted? These points are mentioned in the partnership deed. Next theory is provisions of Indian Partnership Act 1932 pertaining to accounting treatments in the absence of partnership deed. The following provisions of Partnership Act 1932 will be applicable if no partnership deed is prepared or no clarification is made in the partnership deed. Students, listen carefully. These points are very important and very useful doing small sums as well as long sums. So, listen carefully. First point is each partner contributes capital in the firm by mutual agreement. There is no restriction in the act in this regard. It is not compulsory to bring a capital for each partner. Second point, interest on capital of partner cannot be paid. If there is no provision in the partnership deed, interest on capital of partner cannot be paid. Third one is the distribution of profit and loss would remain in equal proportion if there is no provision in the partnership deed about the distribution of profit and loss. The profit and loss would be remain in equal proportion. Fourth one is interest on drawings of the partner cannot be charged. Fifth one is salary, bonus, commission or remuneration cannot be paid to the partners. Sixth point, 6% per annum interest is payable for the loan given by any partner to the firm. Full point. If the loan's interest is not mentioned in the partnership deed, in that condition 6% per annum interest will be paid to the partner. Seventh, in case of any reasonable expense incurred by the partner for the firm, the partner has the right to reimburse it. Next, capital accounts of partners. There are two methods to maintain capital accounts in the books of partnership firm. First one is fluctuating capital account method. And second one is fixed capital account method. Let's learn about fluctuating capital account method. A method in which the opening balance of the capital account and the closing balance of the capital account of any partner is reported fluctuated is known as fluctuating or temporary capital account method. Only one account is prepared here, partners capital account. But when we will solve the sum, there are two accounts prepared. First prepared P&L appropriation account, and second one is partners capital account. Let's go on fixed capital account method. Fixed capital account method is a method in which no change is reported in opening balance and closing balance in the partner's capital account is known as fixed capital account method. Here two accounts are prepared. Partner's capital account and partners current account. But when we will solve the sum, there are three accounts are prepared in fixed capital account method. First one is P&L appropriation account. Second one is partners capital account, and third one is partners current account. Let's learn the specimen under fluctuating capital account method. First, we will find out the net profit or net loss given in the sum. If there is net profit, it is written in the credit side of P&L appropriation account. We will write by net profit here. In the bracket we will write transferred from P&L account. If there is loss, we will write debit side in P&L appropriation account to net loss transferred from P&L account. Either net loss is given or net profit is given. After that, we will find out the capital balance, and there is credit balance of capital balance. So we will write it partners capital accounts credit side, whatever date is given 1/4/16 by balance brought down. After that, we will find out drawings, and it will be recorded in the debit side of partners capital account. Whatever date is written, we will write here to drawings account. After that, we will solve the adjustments, and in the adjustment, interest on capital is given. We will write it partners capital accounts credit side by interest on capital. And second entry will be recorded in debit side of the P&L appropriation account to interest on capital, partner's name and their amount, and total outside of the column. After that, we will record interest on drawings, and we will write last date to interest on drawings. And second entry will be recorded in the credit side of profit and loss appropriation account by interest on drawings. X, Y and Z. Only these two entries are recorded in the credit side of the P&L appropriation account, net profit and interest on drawings. All other adjustments were made in debit side of P&L appropriation account and in credit side of partners capital account. If there is given partners bonus, salary, commission or remuneration, we will record it in the credit side of partners capital account on last date. We will write by salary, bonus, commission, or remuneration. And second entry will be made in the left side of P&L appropriation account to partners salary, bonus, commission, or remuneration. Then we will make the total. If credit side's total is more than the debit side's total, it will be 2 divisible profit. It will be transferred to capital account X, Y, Z in their P&L ratio. If there is P&L ratio is not given, we will distribute it in equal ratio. And second entry will be recorded in credit side of partners capital account on last date by divisible profit. And if there is debit side's balance is more than the credit side's balance, it will be divisible loss. Sorry, here is divisible profit by divisible loss, and it is transferred to capital account X, Y, Z given in given P&L ratio. And second entry will be transferred to partners capital account debit side on last date to divisible loss. There will be divisible profit or divisible loss. Both cannot come at same time. So I have put stars for that. And always there is capital accounts total is more in the side of credit side. Credit side's total is always more than the debit side's total. So we will make the total. After putting the total, we will deduct all the debit side's amount, and on last date we will write to balance carried down. This is the difference. Students, let's solve the sum by fluctuation capital account method. This sum is taken from GSCB textbooks. Here two partners are given, Harpal and Chirag. First of all, we find out the net profit which is given at the end of the sum. You will read that the profit to the firm on 31st March 2017 was 79,400 before above mentioned provisions, but after charging interest on loan of Harpal. In the sense, we will not take interest on loan because here profit is given, in that the interest on loan is mentioned. So we will write this net profit in the credit side of P&L appropriation account. We will write by net profit, and in the bracket transferred from P&L account 79,400. After that we will find out the capital balance from the sum. Here is given on 1st April 2016 their capital is 60,000 and rupees 1 lakh respectively. We will record 8 in the credit side of capital account on 1st April 2016. Whatever the date is given, the date is 1416. So we will write the date 14/2016. The amount is 60,000 and 1 lakh. So we will write by balance brought down. $60,000 and 1 lakh. Next we will find out the drawings. So drawings are during the year on 1/4/2016 Harpal has withdrawn rupees 15,000 and Chirag has withdrawn 20,000 on 1st January 2017. The dates are different, so we will write in debit side differently. 1/4/2016 two drawings 15,000 in the column of Harpal, and as on 1/1/16 two drawings Chirag. In Chirag's column amount will be 20,000. Then we will record adjustments. First adjustment is given, provide 12% per annum interest on capital. So we will write last date. Last date means financial year's last date by interest on capital. 12% 7,200 and 1 lakh's 12% 12,000. And this adjustment second entry will be recorded in P&L debit side, P&L appropriations debit side to interest on capital. Harpal 7,200 and Chirag 12,000, 19,200. Then second adjustment is charge 9% per annum interest on drawings. So here also we will write last date of financial year 31st March 2017 to interest on drawings. Full year's interest on drawings calculated on Harpal's drawings 15,000, 9%. It will come 1350. But we will not calculate interest on drawings full year on Chirag's drawings, because he has made drawings on 1st January 2016. So we will made calculation interest on drawings Chirag. Chirag has made drawings on 1st January 2017 to financial years ending is 31st March 2017, which means 3 months interest are calculated on Chirag's drawings. 20,000 into 9% means 9 upon 100. 3 months means 3 upon 12. 20,000 into 9% into 3 upon 12. Drawings interest will be 450. So we will write 8 in the column of Chirag, 450. Second entry will be recorded in credit side of the P&L appropriation account by interest on drawings Harpal 1350, Chirag 450, total will be 1800 out in the column, main column. Then read third adjustment, rupees 1000 per month are payable to Harpal for his active role in the firm, while 5% commission of divisible profit is payable to Chirag. Then salary to Harpal, to salary Harpal 1000 per month means annually 12,000. Second entry will be recorded in credit side of the partner's capital account by salary. Amount will be 12,000. Next, commission. Commission is also recorded in credit side of capital account by commission. But this commission is taken on the divisible profit. So when we will calculate divisible profit, then we will find out the 5% commission of Chirag. Next adjustment is on 1st 12/2016, Harpal has given loan of rupees 30,000 to the firm. There is no provision for interest on loan in the partnership deed. He claims 11% interest on his loan. Whatever interest he demanded, but he has been not paid 11% because there is no provision in the partnership deed. So he will be paid 6% per annum. But in this sum, the interest on loan is already taken in this amount. So we will not calculate here. Then the sum is completed and we will make total. First we will make total of P&L appropriation account. So you will see that the total of credit side is more than the total of debit side. So make the total 79,400 plus 1,800. It will be 81,200. Write down credit side. Then we will deduct 8 or 81,200. 90, we will deduct 19,200 and 12,000 from the 81,200. Minus 19,200 minus 12,000. It comes 50,000. But it is not final divisible profit because we have to pay commission to Chirag on this amount. 50,000's 5%, 2,500, and this 2,500 will be recorded in partners capital accounts credit side in the column of Chirag. After that, we will find out the difference amount for the divisible profit, and this divisible profit transferred to the capital account. Harpal and Chirag. From the 50,000 we will deduct 2,500 as we have paid the commission to the Chirag. Then it comes 47,500. We will distribute 47,500 in P&L ratio which is given in the sum. If the P&L ratio is not given in the sum, you have to distribute the amount of divisible profit in equal ratio. Here is P&L ratio is not given, so we will distribute this divisible profits amount in equal ratio. This comes 23,750. 23,750 second entry will be recorded in credit side of partners capital account by divisible profit. $23,750. Then make the total of partners capital account. It always credit side's total is more than the debit side's total. So 60,000 plus 7,200 plus 12,000 plus 23,750 equals to 1,02,950. And here we will write down last date to balance carried down, and also will deduct 15,000 and 1,350 from the 1,02,950 minus the final value comes 86,600. After that we will make the total of Chirag's capital accounts credit side. 1 lakh plus 12,000 plus 2,500 plus 23,750. 1,38,250. 1,38,250 minus the debit side minus 20,000 minus 450. It comes 1,17,800. This is the sum which was completed. Students, let's learn the specimen according to fixed capital account method. You know, first of all, you have to write down net profit or net loss. By net profit transferred from P&L account, or you have to write down if there is loss is given to net loss transferred from P&L account. After that, you have to write down the balances of capital account as well as current accounts. So you have to write down capital accounts balance in credit side of the partner's capital account in given date by balance brought down and current accounts balance. In current account, there can be both sides balance can be given, debit balance and as well as debit balance. Credit and debit balance both are can be given, but if A's credit and credit balance is given, then A's debit balance is not given. If B's credit balance is given, then B's debit balance is not given. If A's debit balance is given, then A's credit balance is not given. As well as B's debit balance is given, then B's credit balance is not given. So both side there can be balance brought down in partner's current account to balance brought down. So I am putting star because both side balance cannot be come at the same time. Here also you have to put star because profit and loss will not be given at the same time. Either profit is given or loss is given. After that you have to find out the drawings and at the given date you have to write down drawings in the current accounts debit side. If you will prepare current account, so all the entries will be transferred to the current accounts. If there is interest on capital, it also transferred to the current account. Interest on drawings also transferred to the current account. You have to remember that only 4 entries can be posted in the capital account. First is by balance brought down in the credit side. Other is if any partner brings capital, additional capital, so it will also comes in the credit side by cash or bank account. In the bracket I am writing additional capital. Same way, if any of partner will withdraw his or her capital, it will be recorded in the debit side on given date to cash or bank account. Withdrawn additional capital. After that you have to make the total credit side's total is more than the debit side, and difference amount will be transferred to balance carried down on the last date of the financial year. Only these four entries can be posted in the partner's capital account, and all other entries will be transferred in partner's current account. And second entry will be recorded in the P&L appropriation account. Okay. Next, we will post the adjustments, the adjustment of interest on capital. If that is given, then it will be recorded in partner's current accounts credit side on the last date of the financial year by interest on capital. And second entry will be transferred to the P&L appropriation accounts debit side. To interest on capital. Respected partners, and total will be posted outside. After that, we will calculate the interest on current account. Date, last date of the financial year by interest on current account. This interest will be recorded in the debit side of the P&L appropriation account. We will write to interest on current account on credit balance of current account of partners. And if there is debit balance of current account is given, then this interest will be recorded in the debit side of the current account, interest on current account, as well as credit side of the P&L appropriation account by interest on debit balance of current account of partners. If salary, bonus, commission or remuneration is given, it will be recorded in current accounts credit side. On the financial year's last date. By salary, bonus, commission or remuneration. And same will be transferred to the P&L appropriations accounts debit side. To salary, bonus, commission or remuneration to the partners. If interest on drawings is given, it will be recorded in debit side of the current account on the last date. To interest on the drawings, and same will be transferred in the credit side of the P&L appropriations account. Here we will write by interest on drawings AB amount and total. After that we will make the total. If credit side total is more than the debit side, it will come divisible profit and it is transferred to the current account. And debit side total is more than the credit side total, it will come divisible loss. It will also transfer to current account. In their P&L ratio. Divisible profit will be transferred to the credit side of the partner's current account and divisible loss will be transferred to the debit side of the current account. Then in the credit side we will write by divisible profit and in the left side debit side we will write to divisible loss. So here also we will put star. Okay, then we will make the total. If credit side total is more than the debit side, so difference will come in debit side to balance carried down. If debit side total is more than the credit side, then credit side's balance will be carried down by balance carried down. If other partners credit side balance is more than the debit side, then balance carried down in the debit side. If debit side's balance is more than the credit side, then balance will be transferred to by balance carried down. This was the specimen by fixed capital account method. Okay students, let's start second sum, which is long sum and taken from the GSCB books. So here two partners are given, Bhadresh and Hiral, and their profit and loss sharing ratio is 3:2. On 1st 4 2016, total capital of partners But before putting the capital balance, we have to find out the net profit which is given at the end of the sum. So you can read that before consideration of above mentioned adjustments, the profit for the year ending on 31st March 2017 of the firm was 4,06,800. So we will write down it in the credit side of P&L appropriation account by net profit. In the bracket, transferred from P&L account, amount 4,06,800. After that, we will put capital balance, and this is given on 1st for 2016. Total capital of partners was rupees 4,20,000 and the proportion of their fixed capital is 4:3. So we have to distribute 4,20,000 between Bhadresh and Hiral in the ratio of 4:3. So 4,20,000 into 4 divided by 7, it comes 2,40,000. And same way we have to find out Hiral's capital balance, so it comes 1,80,000. Then we will put it in the credit side of the capital account on given date 1/4/2016 by balance brought down 2,40,000 and 1,80,000 respectively. Next, we will write down the current accounts balance. So Bhadresh on this day, balance of their current account are as follow. Bhadresh credit balance 36,000 and Hiral's 24,000 debit balance. So we will write down in the current accounts credit side given date 1/4/2016 by balance brought down in the Bhadresh column 36,000 and debit side of the partner's current account same date 1/4/2016 to balance brought down in the Hiral's column 24,000. After that we will write down the drawings. So what is the drawings? In the next paragraph, it is written that on 1/10/2016, Bhadresh has withdrawn 36,000 and on 1/1/2017, Hiral has withdrawn 48,000. So we will write down it in the debit side of the current account. Every entry will be put in the current account except capital balance in the debit side of the partner's current account. We have to write drawings on given date on 1/10/2016 two drawings. Bhadresh has made 36,000 drawings and on 1/1/17 Hiral has made 48,000 drawings. Next, we will study the sum. We will go through the adjustments which is given in the first paragraph. As per partnership deed, per annum 12% interest is payable on the capital of the partners. We will see the capital from partners capital accounts credit side, but interest on capital will be put in the credit side of the current account. Interest on capital. 31st 3rd 2017, the last date of the financial year. By interest on capital, 2,40,000, 12 percentage, it comes 28,800, and 1,80,000, 12 percentage, 21,600. You have to use your calculator or calci, and this one's second entry will be posted to the debit side of the P&L appropriation account. We will write here 2 interest on capital. Bhadresh 28,800, Hiral 21,600. Total will be 50,400. Next, in adjustment, we will read from the first paragraph. Provide per annum 10% interest on opening balance of the current accounts. 10% opening balance of current account. Bhadre's opening balance is credit and Hiral's opening balance is debit. So credit side, we will write down by interest on current account. 10% it will be 3,600, and here debit side to interest on current account, and it will be 2,400. Bhadre's interest on capital account will be transferred to the debit side of P&L appropriation account, and Hiral's interest on current account will be transferred to the credit side of the P&L appropriation account, means cross entry will be transferred. So we will write P&L appropriation accounts debit side to interest on current account Bhadresh. It will be 3,600, and by interest on current account Hiral, it will be 2,400. Then read out next adjustment. What is it? Per annum 12% interest is to be charged on drawings up to here. 12% interest, but we have to make calculations because no one is making the drawings on the opening date of financial year. So Bhadresh makes the drawings as on 1/10/2016, and Hiral makes the drawings on 1/1/2017. So we have to make the calculation. Bhadresh interest on drawings. Bhadresh made as on 1/10/2016 to 31st/3/17 means 6 months. The amount is perhaps 36,000. Yes, 36,000. 36,000, 12% per annum, 6 months. It will be 36,000 into 12% into 6/12. It will be 2,160. And Hiral's interest on drawings. 48,000 into 12% into how many months? 1/1/2017 to 31st/3/2017. It means 3 months, and 3 months interest will be calculated on 48,000 into 12% into 3 divided by 12. The amount will be 1,440 rupees. So we will write it: partners current accounts debit side to interest on drawings. The amount will be 2,160 of Bhadresh and 1,440 is for Hiral. And next entry will be posted in the credit side of P&L appropriation account by interest on drawings. So Bhadresh, Hiral. Bhadresh's amount is 2,160. Hiral's amount is 1,440. Make the total, it will be 3,600. After that, we will read the adjustments. 2,400 per month as a salary are payable to Bhadresh for his active role in the firm. So we will write it: P&L appropriation accounts debit side, first entry to salary. It is for Bhadresh, and 2,400 is for 1 month. So for per annum it will be 28,800. And second entry will be transferred to the current accounts credit side in the column of Bhadresh. Last date by salary, and in the column of Bhadresh we will write down 28,800. Next we have to read what is given in the sum. Okay, next, 10% commission on net profit is payable to Hiral from net profit, but deduction of his such share from net profit. If this line is given, we have to take like that. 10% commission means into 10 divided by 110. If there is 12% means into 12 divided by 112. So the sum is completed. So we have to make total. First, you will see that credit side's balance is more than the debit side balance. So make the total 4,06,800 plus 2,400 plus 3,600. It will comes 4,12,800. 4,12,800. We have to deduct all the debit balance from this amount, and we will get total amount, which is divisible profit, as well as in this amount we will get commission, and final divisible profit will be transferred to the current account. The partners is Bhadresh and Hiral, and we have also to be paid commission to Hiral. So when we will deduct debit balance from 4,12,800, we will get combined amount of divisible profit as well as commissions amount. So deduct it. 4,12,800 minus 50,400 minus 3,600 minus 28,800. The amount is 3,30,000. So commission will be calculated like this: into 10 divided by 110, and it will come 30,000, and 3,30,000 minus 30,000, this will become divisible profit and transferred to the current account. So first we will make second entry of commission in the current account of Hiral. So last date will be written here by commission, and in the credit side we have to write down 30,000. After that we will distribute 3 lakh in the ratio of P&L account, and the ratio is 3:2. So 3 lakh into 3 divided by 5, it will come 1,80,000, and Hiral's share is 1,20,000. We will transfer it to the credit side of the current account. So credits, on the credit side we will write here by divisible profit 1,80,000, 1,20,000. After that we make the total of capital balance, capital accounts. Here 2,40,000, 1,80,000, 2,40,000, 1,80,000. Here is no amount in the debit side, so fully total is transferred to balance carried down. It is the closing balance of capital. 2,40,000 difference, and here the difference is 1,80,000. After that, we make the total of partner's current account. You will see the amount both side. The balance of credit side is more than the debit side. So we will make the total 36,000 total. First, we will make the total of Bhadresh 36,000 plus 28,800 plus 3,600 plus 28,800 plus 1,80,000. It will be 2,77,200. 2,77,200. And we will deduct debit balance of Bhadresh from here, and we will get here closing balance of current account to balance carried down. So we have to deduct minus 36,000 minus 2,160. The amount will be 2,39,040. 2,39,040. It is the closing balance of current account. After that, we will make the total of Hiral 21,600 plus 30,000 plus 1,20,000. It will be 1,71,600. 1,71,600. 1,71,600. We have to deduct debit balance from it, minus 48,000, sorry, first 24,000 minus 48,000 minus 2,400 minus 1,440. So the amount will be 95,760. This was the closing balance of current accounts of Hiral. So this was the sum, lengthy sum, long sum. It is completed. Next, we will do short sums. Students, let's start short sums, which are taken from the GSCB textbooks. Let's read the sum. A partner withdraws identical amount at the end of the each month from the firm at the end of the year. Total annual drawings is 12,000. 12% per annum interest is chargeable on drawings. You have to calculate amount of interest. Students, remember that if any of partner has withdrawn an identical amount at the first date of each month, then capital N equals to 78 upon 12 will be taken. Second note, if any of partner has withdrawn an identical amount at 15th date of each month from the firm, the capital N will be taken as 72 upon 12. If any of partner has withdrawn an identical amount at the end of each month, then capital N will be taken as 66 upon 12. Here, a partner withdraws an identical amount at the end of each month. So, capital N will be taken as 66 upon 12. For that, we have to calculate per month's drawings. Here total annual drawings is given, so we will calculate per month's drawing. formula that can be possible, we can write like that: total annual drawings divide by 12 equals to 12,000 divided by 12. The amount will be 1,000 rupees. This was the per month's drawings. After that, we will calculate interest on drawings. Take per month's drawings into interest rate 12 upon 100 into 66 upon 12. 12 to 12 cut, 00 to 00 cut, 66 10 660. The interest on drawings will be 660 rupees. You can also calculate this amount from your calculator. You can use your calculator also. Let's start second sum. First, we will read the sum. Amruta and Divya are the partners of a firm. Their capital ratio is 3:2. Amruta is to be paid 8% commission on net profit after deduction of such commission. Remember that here is written after deduction of such commission. What amount will be received by Amruta if profit of the year is 96,876? First of all, you have to write down P&L ratio. Amruta, Divya. P&L ratio. Just keep attention on this. This is not P&L ratio. This is capital ratio. If P&L ratio is not given, then we will take it equal ratio. After that, we have to write down profit of the firm. Profit of the firm is 96,876. After that, we have to find out Amruta's commission. 96,876 into her commission is 8%, means 8. Here is written after deduction of such commission, means we will write in denominator 108, 100 plus 8% commission. Then we will find out the amount. 96,876 into 8 divided by 108. It will be 7,176. After that, we will find out net profit after commission. 96,876 deduct 7,176. It will be 89,700 rupees. Then we will find out the amount of profit which is gained by Amruta. So Amruta's profit. Amruta's profit equals to 89,700 and her share is 1 divided by 2 because 1 plus 1 equals to 2. 89,700 divided by 2. It comes 44,850 rupees. What have we wanted to get? What we want to find? Amount received by Amruta. So amount receivable by Amruta equals to, she gets profit, she also gets commission. So profit is 44,850 plus 7,176 plus 7176. So the amount will be 52,026. Amruta will be received 52,026 rupees. This was the sum completed. Second sum. Students, let's start third sum. Vismay, Abhijit and Kunal are partners sharing profit loss in the proportion of 3:2:4. Manager is to be paid 10% commission on profit, but after the deduction of his share. The share of profit of Abhijit is 30,000. So first of all, we have to write down the proportion. Vismay, Abhijit and Kunal. P&L ratio, three ratio 2:4. Abhijit's profit is given. We have to find out firm's profit on the basis of Abhijit's profit. So suppose the share of firm equals to 1, then we will write left hand side share and right hand side profit. What is the share of Abhijit? 2 divided by total of all the three ratios 4, 2, 6, 3, 9. When the share is 2/9, then profit is 30,000. When the share is 1, profit is how much? So we will get firm's profit. Do the cross multiplication. 30,000 into 1 divided by 2/9. 9 goes to upside. 30,000 into 9/2. This comes 30,000 into 9/2 equals to 1,35,000. This is the profit of firm. This profit is find out on the basis of Abhijit's profit. So this profit is profit after the commission equals to 1,35,000. So when we find out manager's commission, we will directly take 10% into 10%, 10 upon 100. If that commission is not after the commission, profit after the commission, if it will be profit before the commission, when we will take 1,35,000 into 10 upon 110. But it is profit after the commission, so we will directly take 10% of it. So it comes 13,500 rupees. This is manager's commission. The sum is over. Students, let's do the next sum. The profit loss sharing ratio of Rajkumar, Kaushik and Sharma is 15:10:9. Full point. The total profit of the year of the firm is 68,000. Determine the share in profit of each partner. So first we will write down P&L ratio. Rajkumar, Kaushik and Sharma. P&L ratio equals to 15, 10 and 9. Firm's profit equals to 68,000. Then we will find out partners profit individually. Rajkumar's profit equals to 68,000 into 15. His share is 15 divided by total of all the three ratios 34. It comes 30,000. Then we will find out Kaushik's profit. Kaushik's profit equals to 68,000 into 10 divided by 34. Then it comes 20,000. After that we will find out Sharma's profit. $68,000 into 9/34. It comes 18,000. Then make the total of all the three partners. It should be 68,000. Otherwise your sum is wrong. This is fourth sum. Let's start the next sum. Mehta receives his share 4 times of Pandya while Bajpai receives half of share of Mehta. Profit of firm at the end of the year is 87,500. Determine the share in profit of each partner. So first of all we will write down the names Mehta, Pandya and Bajpai. P&L ratio, we have to find out the P&L ratio here according to given information. Mehta receives his share 4 times of Pandya. So Mehta received when Pandya's share will be decided. So we will assume that Pandya will get 1 share. So Mehta will get 4 times of Pandya. 4 into 1, 4. After that Bajpayee receives half of share of Mehta. So we will divide Mehta's share by 2. So we will get 2. After that, we will write down firm's profit equals to 87,500. Mehta's profit equals to 87,500 into 4 divided by total, means 4 upon 7. 87,500 into 4 divided by 7. It comes 50,000. After that, we will find out Pandya's profit. Equals to 87,500 into 1 divided by 7. It comes 87,500 into 1 divided by 7 equals to 12,500. Next, we will find out Bajpayee's profit equals to 87,500 into 2 upon 7. It comes 25,000. After that, make the total 25,000 plus 12,500 plus 50,000. It should be total firm's profit. If it is not, you have calculated the sum wrong. Students, let's learn sixth sum. So I have prepared here statement showing calculation. Read the sum. Profit of partnership firm of Sheila, Surbhi and Sanket is rupees 1,35,000. They have shared profit in the ratio 2:1:3 instead of 3:2:3. What accounting treatment is to be given to the capital account to rectify this error? So, first of all, we will distribute profit in correct share. Distribution of profit in correct share, and correct share is 3:2:3. So we will distribute 1,35,000 in this ratio. 1,35,000 into 3 divided by 325,388. 50,625. Sanket's share also will be same because share is same, and Surbhi's share is 33,750. After that, we will deduct distribution of profit in wrong share. Wrong share is 2:1:3. Distribute 1,35,000 in this wrong ratio. So 1,35,000 divided by 6 multiply by 2. It comes 45,000. Surbhi's shares comes 22,500 and Sanket's share will be 67,500. After that, we will deduct these wrong share from correct share. So 50,625 minus 45,000, the amount will be plus 5,625. After that 33,750 minus 22,500, it comes plus 11,250, and 50,625 minus 67,500, it comes in minus 16,875, and 1,35,000 minus 1,35,000 dash. These amount will be transferred to capital account or current account to rectify the error. Plus sign will go to the credit side and minus sign will go to debit side. So Sanket's capital or current account debit to Sila's capital current account credit to Subhi's capital or current account credit. We will give the journal entry for rectification the error. So third one is Sanket's capital or current account debit amount will be 16,875 to Sila's capital or current account 5,625 to Surbhi's capital or current account 11,250. We have to write down the narration being rectified the error and the amount will be transferred to their capital or current account. You can write down narration yourself according to your language. This sum is completed. Let's solve the seventh sum. Ram, Rahim and Ishu are partners of a partnership firm. Their capital as on 1st April 2016 was rupees 60,000, rupees 40,000 and rupees 50,000 respectively. After the distribution of the profit of the year, it was realized that charging of 6% interest on partners capital account was missed out. Write an entry for the rectification of error. So we will calculate interest on capital first. Interest on capital 60,000 6% will be 3,600, next 2,400, next 3,000. Then we will make the total of all threes, so it will come 9,000. After that we will deduct from interest on capital divisible loss, because interest on capital is loss for the firm or expense for the firm. So divisible loss is there, and how much divisible loss? It will be 9,000. So we will deduct 9,000 from interest on capital. In which ratio? In P&L ratio. Here P&L ratio is not given, so we will distribute this in equal ratio. So 3,000 is here, 3000 is here and 3000 is here, and this difference will transfer to capital or current account. To rectify the error, deduct 3000 from 3600, it will come plus 600, and here 2400 minus 3000 minus 600, dash 3000 minus 3000, 9000 minus 3000, 9000 minus 9000, it also will be dash, means 0. So minus will be transferred to debit side and plus will be transferred to credit side. Ram gets plus amount, so it will be transferred to credit side, and Rahim's minus, then it will be recorded in debit side. So we will write down the rectification entry. Rahim's capital or current account debit to Ram's capital or current account amount will be transferred 600, narration being rectified the error of interest on capital. So this is the sum and it is completed. Let's start the next sum. Lata, Geeta and Pravina are partners of a partnership firm. After distribution of the profit of the year, it was released that charging of interest on partners' drawings account respectively rupees 2700, 1200 and 1500 was missed out. Write an entry for the rectification of error. So students, it is fully inverse from the above sum. So we will write down interest on drawings but in minus form. Minus 2700 minus 1200 minus 1500, and after that we will get total of all the three amounts. 2700 plus 1200 plus 1500, it will be 5400. After that we will add divisible profit in that, because interest on drawings is income for the firm. So we will get divisible profit of 5400 and we will distribute this profit in P&L ratio. Here P&L ratio is not given, so we will take equal P&L ratio. We will distribute 5400 in equal ratio, then we will get Lata's profit 1800, Geeta's profit 1800 and Praveena's profit 1800. So this plus minus will be transferred to capital or current account to rectify the error. So here we will get minus 900, here we will get plus 600 and here we will get plus 300 and here dash. You know that plus amount will be transferred to credit and minus amount will be transferred to debit. So Lata will be debited. So we will write the rectification entry. Lata's capital or current account debit 900. To Geeta's capital or current account 600. To next partner is Praveena's capital or current account 300. Narration will be being the error is rectified and the amount are transferred in their capital or current account. This sum also finish. Students, let's learn ninth sum. Mukesh, Dhaval and Vinod are the partners of a partnership firm. Their capital proportion is 4:2:3. Dhaval and Vinod has given assurance to Mukesh that he will get minimum 35,000 from the profit. The profit of the year is 90,000. How would you distribute the profit among the partners? First of all, we have to write down the P&L ratio of Mukesh, Dhaval and Vinod. The P&L ratio is not given in the sum. This ratio is given. It is capital proportion. So we will take equal ratio. Firm's profit is 90,000. Let's distribute among the Mukesh, Dhaval and Vinod. So Mukesh profit will be 90,000 into 1/3 rupees 30,000. Dhaval's profit equals to 90,000 into 1/3 rupees 30,000. Vinod's profit will be 90,000 into 1/3 30,000. You read in the sum, Mukesh will get minimum 30,000 from profit. This type of guarantee or assurance will be given by Dhaval and Vinod. So we will write here Mukesh will get rupees 30,000 minimum from the profit. This assurance is given by Dhaval and Vinod. Thus, the difference amount $35,000 minus 30,000 equals to 5,000 will be given by Dhaval and Vinod in their P&L ratio. So Dhaval and Vinod's P&L ratio will be 1:1. Dhaval will give 5,000 into 1/2, 2,500 rupees. Vinod will give 5,000 into 1/2, 2,500. Then we will find amount receivable by Mukesh. Then Mukesh will get 30,000 and difference 5,000 means 35,000. Amount receivable by Dhaval. Dhaval gets 30,000 from the profit and he gives 2,500 to Mukesh. Then he will receive 27,500 rupees. Amount receivable by Vinod. Vinod gets 30,000 from the profit and he gives 2,500 to Mukesh. So he will get 27,500 rupees. This is the sum and it is completed. Let's understand the next sum. The closing capital of Raghuveer is rupees 80,000, in which rupees 12,500 drawings of current year and profit of rupees 17,800 are recorded. What will be the interest at 6% per annum on the opening capital? Here the closing capital of Raghuveer is given and we have to find 6% per annum interest on opening capital. So we have to find out the opening balance of capital through this formula. So formula is closing capital and we will add drawings in closing capital. After that we will make total and from the total we will less divisible profit or profit, and finally amount will come. This is opening capital. So closing capital is 80,000 plus drawings 12,500. The amount is 92,500. After that divisible profit, which is 17,800, will be deducted from 92,500. Then amount will come 74,700. On this amount we will calculate the interest on capital. Interest on capital equals to 74,700 into 6%. Into 6%, the amount will come 4,482. So this is the answer. Okay students, let's learn the next sum and the last sum. A, B and C are the partners sharing profit loss in equal proportion. So here profit and loss is given. It is equal. The total capital is of 4,50,000. So we will mention here capital 4,50,000 in the ratio of 1:3:2. So we have to distribute this capital among three partners in this ratio 1:3:2. 4,50,000 divided by 6. So A's capital is 75,000 and C's capital is 1,50,000 and B's capital is 2,25,000. We have put double line. This means it is not included in the total. Firm pays interest on capital 9% per annum. Partner C has received 73,500 including interest on capital. Means partner C amounts received. It is included profit plus interest on capital. So we have to calculate, determine the amount payable including interest on the capital of A and B. Means we have to find out the amount profit plus interest on capital of each partner. Each partner means A and B. C's amount is already given. So first of all, we will find out interest on capital of each partner. Interest on capital at the rate of 9%, 75,000 multiplied by 9%, it comes 6,750. 2,25,000 into 9%, it comes 20,250 and 1,50,000 into 9%, it comes 13,500. We have to add here plus profit and total amount receivable will come here. So C will get what amount? We will see in the sum 73,500. C will get 73,500 including interest on capital. So in the column of C, we will put the amount 73,500. After that, we will deduct 73,500 minus 13,500. It comes 60,000. And the ratio of profit and loss is 1:1:1. Means all the partners will get equal amounts profit. So if C gets 60,000, A also gets 60,000, B also will get 60,000, then total the amount interest on capital plus profit 66,750 will be got by A, 80,250 will be got by B. So A's receivable amount equals to rupees 66,750 and B's receivable amount equals to rupees 80,250. This is the answer. So this chapter is completed. This sums is completed. You have seen our full video. So for that, thank you very much.